So today I'm going to show you guys how to sell cash secured puts for easy gains in the stock market. So here we're looking at the options chain for Apple's stock on Fidelity. The prices for calls are on the left and puts are on the right, and we want to make sure we can see all the available strike prices. So for this example, we're going to go out about a month from the current date here to the February 3rd prices. Now while Apple is currently trading at $125 per share, let's say we would like to buy it if it goes cheaper, maybe down to $110 per share. Well, by selling a put, you can actually make money while waiting for it to get to the price you want to buy it at. In this case, you'll receive $151 for selling this put since each contract represents 100 shares. If Apple stock stays above $110 by February 3rd, you keep the $151, and if Apple falls below that price, you still keep the $151, but will be forced to buy 100 shares of Apple at $110 per share, although since you keep the $151, your actual cost basis is going to be $108.49 per share as shown. Therefore, you either receive $151 or are forced to buy Apple, but at a huge discount to its price today, making this a win-win situation. Now this strategy can beat the market fairly easily as well. As you can see, $151 represents a return of 1.37% on your money in 31 days. Now there are 11.77 31-day periods in a year, meaning if you could make these trades consistently, then the 1.37% every 31 days will compound to an annual return of around 17.37%, while the S&P 500 averages around 10% for comparison.